Okay, Greg Balderrami here, back with another edition of Investment Shorts, keeping you abreast of what's important in today's markets in less than 5 minutes. Today's big news was the CPI print year over year. We're at 3% as of today, came in below expectations of 3.1%, and that's down from 4% prior. That has repercussions associated with expectations of the Fed interest rate hikes going forward. Investors going into this were thinking two more rate hikes before the end of the year. Now we're looking at investors um, pricing in just one more rate hike on the 26th of this month. One thing to keep in mind is that there are some basing effects on these year over year comparisons. Think back a year ago, you have to take into consideration the effects of the Russian invasion of Ukraine as, as an example. That being said, I've been telling investors to increase duration since the end of last year and actually to get more conservative ahead of and concurrently with what's been going on for a year now, and that has been a decrease in the rate of change of inflation over the past year or so. And so, for most investors, there's been a lot of cash on the sidelines, which has been a great bet thus far. Um, and so, for most investors, that's going from cash to what I would say would be something like a 2 to 3 year bond on the investment grade side, probably government bonds again in the 2 to 3 year range. Let's see what effect that had on the bond markets really quickly here. The 10-year, as of right now, is down to 3.85, which is a decrease of 11 basis points. On Monday, we were hovering around 4% on the 10-year Treasury. 2-year today is down to 4.73. That's down almost 14.1 basis points. That was up around 4.87, 4.86% on Monday. If you would have went long treasuries going into today, you would have made quite a bit of cash. So that's the news for today. What do we need to take a look at, and what's next? On July 24th, the NASDAQ 100 will be rebalancing its portfolio before trading. So stocks like Microsoft, Apple, Nvidia, Amazon, Meta, which are the top holdings in the NASDAQ 100, will all be reduced. And that's the result of the significant run up in these stocks year to date. And so it'll be interesting to see what happens to those stocks as a result of that rebalancing. Another thing to keep an eye on going forward will be earnings and earnings expectations. The PE, as an example of the S&P 500, is around 20 at this point, which is beginning to get a bit frothy in terms of historical valuations. Going forward, it will be interesting to see what effects the Fed's interest rate hiking program has had on earnings, which the effects tend to have a lag effect in general. Please tune in tomorrow where I'll be taking a quick look at the producer price index print.